Yes, sir.
Thank you, Mr. Chairman. As we were talking about tariffs a little bit earlier, the senator from Virginia talked about Australia. I will point out that Australia has, well, we bought about $28 billion worth of Australian beef, and they've bought exactly zero of ours. So there's an opportunity to be able to improve that trade relationship. So that's one of the things I hope will come out of the trade negotiations.
You will acknowledge there is, though, we actually have a trade surplus.
We actually have a trade surplus with Australia. That is correct. But we'd like to sell more beef to them. So that's an opportunity. But one quick question on that, kind of just following up on Senator Kennedy's line of questioning. So if a tariff was put in place and the prices went up, wouldn't that be a one-time event, right? Because after that, it would be baked in. It's just a one-time thing.
So it might well be, as I indicated in my opening remarks, it might well be a one-time event, but that isn't a law of nature. You know, we would want to make sure of that. We were more sure of that back in 2018 because we'd had, 40 years of low inflation. Coming off of a global inflation episode where we haven't fully returned to 2%, it's something that's a question we will approach carefully.
But if the tariff is only put in once and just maintains the flat rate there, then how could that be inflationary in the second year?
Well, because it could be a process of many years. I mean, that's a couple of things. One is if it comes in quickly and it's over and done, then yes, very likely it's a one-time thing, like an oil shock, a one-time oil shock where the price comes back down, it goes through the system. It doesn't raise inflation, just raises prices once. But if you have a process that goes on multiple shocks for years, for example, or if the shocks are very large, that kind of thing. And I think, again, we have to be conscious of the current situation, which is people haven't seen 2% flat inflation for some years now, and it's different from what it was in 2018 when we had tariffs earlier, when we actually cut rates. Mm-hmm. So I'm not saying we're not reacting at all to this. It's a risk we feel like as the people who are supposed to keep stable prices for the benefit of the American people, we need to manage that risk too. That's all we're doing. We're not deciding what to do yet.
Yeah. So if Senator Warner's comment that a tariff is a tax, would that imply that then taxes could be inflationary as well?
No.
So what's the difference between a tax and a tariff then? Or do you disagree with Senator Warner's characterization that tariffs are not taxes?
I wouldn't disagree with that, but it's not the language I use. Look, this is, as I say, one time could be the base case, but in a situation like this where the process could go on for a long time, where the effects could be large or small, it's just something you want to approach carefully in a world where inflation is not back to 2%. And that's our job. If we make a mistake here, people will pay will pay the cost for a long time. And so we're just approaching the question carefully. That's all we're doing. You know that, a majority of my committee has said that they do expect to cut rates between now and the end of the year in the remaining 4 meetings. So it's not that we're, taking a strong view that it will be inflation and not a one-time cost increase. It's just that we're going to take a careful approach to that very critical question.
Well, let me switch gears on you a little bit. Communist China is our single greatest threat to America's national security and financial independence. Now more than ever, the U.S. must ensure the security of our financial system against Communist China's malign influence. And in 2022, Senate Homeland Security and Government Affairs Committee released a report identifying efforts by Communist China operatives to infiltrate the Federal Reserve System. The report contained real-life examples of Communist China's attempts and tactics used to target Federal Reserve officials. In late January, a former senior advisor to the Federal Reserve was arrested on charges that he conspired to steal Federal Reserve trade secrets to benefit and advance Communist China's interests. This Wall Street Journal article from May 2025 details the potential ramifications of his actions. The kind of data and trade secrets that this Federal Reserve employee shared could allow Communist China to manipulate the U.S. market and gain advanced knowledge of changes to the federal funds rate. It could provide Communist China with an advantage when selling or buying U.S. bonds and securities. Chairman, has the Fed Reserve made any changes to strengthen its internal counterintelligence and security protocols since the development of these incidents?
So that's an incident, and I would say we take it very seriously. We have quite elaborate and serious and strict provisions around staff access to information, serious protections for confidential information. We have background checks. We have annual training. We have many of those things. I don't know that we've made any fundamental changes, but we're certainly, sorry, very sorry to see something like this having taken place. And we're certainly looking at the protections we have in place.
Great. Well, I have another question, and we'll just submit as a QFR, but I know the chairman said you've got a heart out, so I'll go ahead and yield back my time. Thank you, Mr. Chairman.
Thank you. Senator Van Hollen.
Thank you, Mr. Chairman and Chairman Powell. Good to see you. I want to start by acknowledging the continued uptake of the FedNow real payment system. I know I've raised the development and rollout of that system with you in many, many hearings over many years. We're now about 2 years after launch. I want to continue to work with you and your colleagues to encourage expanded adoption of the capability and capacity so that customers have real-time access to their money. So I just ask that we continue to work on that together. You agree?
I do.
I thought you might. Thank you. So I want to ask you about the student loan situation in the country. And you've talked about this in the past, and you've talked about how it can be a drag on the economy, especially when it gets to be very high in terms of balances that cannot be paid. According to the New York Fed, student loan balances grew by $16 billion to reach $1.63 trillion in the first quarter of this year. Data shows an uptick in the student loan delinquency rate overall, the age of delinquent borrowers, and the number of newly delinquent borrowers. The Department of Education, meanwhile, restarted debt collection activities last month. And starting in July, nearly 2 million borrowers could see their wages being garnished. Meanwhile, here in the Senate, President Trump and Republican senators are working to pass this piece of legislation that would limit affordable loan repayment options and make it harder for borrowers to responsibly repay their debt and get back on a path toward financial health. So, Mr. Chairman, you said before in your testimonies that student loan debt can negatively impact borrowers' ability to fully participate in our economy and that it can weigh down on the economy overall. Is that still your view?
Yes, it is.
And could you just share your assessment, just from a factual perspective, about how this problem seems to be growing at this point in time, and what would happen if we allow all of these borrowers to default? So
the point I was making, I try hard not to comment on things that aren't Fed policy, but I broke that rule in this case many years ago, so I'll just say what I said then, which is, you can make all kinds of investments and you can discharge if you can't pay back the loan, you can discharge it in bankruptcy. The one exception we make is student loans. And I ask whether that is wise national policy. People borrow to invest in their education. That we do not forgive. It seems like something for Congress to consider, that's all. It's none of the Fed's business, really. Ultimately, it's not a big macroeconomic thing. But I've said it before. I said it again.
Mr. Chairman, I appreciate your breaking your own rule before, and I appreciate your
I won't do it again.
Now. I could not agree with you more about the anomaly in the ability to discharge a debt in bankruptcy. The idea that student loan sort of is the one category of debt that we don't allow to be discharged is confounding. I think, unfortunately, so far, it's been a sign of the power of some of the companies involved in that area. And I just came from another committee where I'm being the ranking member, so I apologize if you already talked about the tariff situation. But I know this was obviously a factor that you all had to consider in making decisions about changes in the interest rates. Obviously, there's a lot of uncertainty in the economy. I hear it every day from Marylanders. We have the Port of Baltimore. We have lots of small businesses that rely on tariffs. You're an economist. You know that increasing tariffs is like increasing taxes across the board. But can you just speak to the uncertainty component of all of this and how that is weighing on people's decisions?
So surveys show very widely that people feel uncertain about the economy, and they do point to tariffs in that answer. I will say, though, that actually peaked back in April, and has come down a little bit. And if you talk to businesses, I talked to an unusually large number of business people in the last couple of months, and the feeling is a little better now than it was. They're getting on with it and feeling, I'd say surveys are still showing depressed sentiment, but it's moved up from where it was.
I would say, Mr. Chairman, that may be the case at this moment, but we all know that we could wake up any morning and see another tweet, and that could change dramatically. So I appreciate your efforts to try to do what you can to meet your dual objectives at the Fed. Thank you, Mr. Chairman.